What's up, guys? Mike Sharp here. Again, this is Sharp Investing, and we're going to talk about Flow Traders Quarter 2. First off, I apologize for the sound and the lighting. I am in a hotel room in Melbourne, Australia for the month, so I just thought I would do a quick video and catch everyone up on my thinking on this one. So obviously this was a weak quarter, and they only made 1 cent per share, and the net trading income was down significantly from last year due to very low volatility in all markets, which means everything was going up. So that's fine. We expected the earnings for Flow Traders to be weak this quarter. I expected them to be a little bit better than this. It's actually weaker than I expected, but I think that digging into this, I'm starting to understand a little bit more why the margins have come down this year. So the primary thing here is that the financial expense, well, except for obviously the net trading income was down. So if we dig into the financials a little bit, looking into the first half results on net financial expenses, we can see that these are up significantly from last year, over double. And the reason for that is these are interest costs that they pay to the prime brokers for the credit products they use there. And so given that interest rates are much higher this year, that is why those expenses were a lot higher. Now, I should have figured this out a while ago. It's not really like these were hidden, but I just didn't pay attention to them. And I'm like, oh, okay, the higher rates are actually hitting them on the bottom line. So that is potentially a temporary effect. I don't personally expect these Western economies to be able to absorb these levels of interest rates for very long before they create a problem. That could be wrong, but I know that there's a lot of debt in the system, and I think that that is going to have a serious effect at some point here as it works through the system and people run off their excess savings that they build up over COVID. And there's a whole bunch of other stuff there, but I'm not going to get into all the economics of it right now. But I do expect that there will be a problem at some point from these interest rates, and central banks may have to reverse course here once we have whatever problem they're going to create. I don't know what it's going to be, but it's going to be something. I can almost guarantee it. So quick things from their earnings release. They talk about growing their footprint in all markets, and the tricky part with this company is there's nothing to measure. There's no quantifiable numbers you can follow for growth because the trading income moves around with volatility, so it's really hard to see what's going on under the surface. So there's a little bit of trust here, or maybe a lot of trust we need when investing in Flow Traders. You need to trust that the management's doing what they say they're going to do and actually growing the business to their target of $1 billion in net trading income in the next 4 years. Now, that's their goal, but again, they don't even release the benchmark numbers that they're actually using to track this, because there's a normalized earnings number that they're watching while the actual earnings are doing this, or the income is doing this, let's say. So some trust involved for sure. What else? Fixed costs and headcount down a little bit from the first quarter, but so they've done some cost cutting, but it doesn't sound like they're going to do much more. The buyback is set at 15 million, and that's been extended for 12 months, and that's pretty insignificant compared to the size of the market cap, which I think is 750 billion right now, or million, I should say. And given that most of that, or at least a fair chunk of that 15 million, is going to go towards employee share programs, so not relevant as well. It's pretty boring, pretty boring earnings release. Now, one of the things, as I think about this company, the thing I realize is that this is almost all about the dividend. The market is basically paying for the dividend because it's really hard to track where the company's going, because the earnings, like I said, the income's all over the place. So the thing that people can bank on is the dividend they've got in the past, and sort of guess on how much they're going to get in the future based on sort of a normalized number. Now, there's three things going against the dividend right now. First is that the higher general interest rates. 10-year bond in the US, I think, is at 4.35. So you're going to need a higher dividend rate than that to absorb the risk if you're investing in a stock. So you might be shooting at like a 6% dividend yield on some companies, maybe even 7. So that's hurting them. If the general interest rates were lower, like a 1%, then you'd only need a 3 or 4% dividend from this company, and thus the stock price would be higher. The payout ratio, the second thing is that the payout ratio was actually cut recently. I think it was last year, but don't quote me on that. So if you're comparing stock price now to stock price before, there's a lower percentage of earnings that are actually getting kicked out as dividends now. So it's not really comparing apples to apples. And to catch anybody else up, they did that in order to invest more in growth. So taking more of the cash flow and investing in growth. That's actually what we want. That's a good decision. I think the money's better in their hands than in mine. So the third thing is that, with volatility down and the interest rate expense up, the profit goes down, and therefore the actual amount of dividend is lower. So that's been a problem this year too. Now, I use this as a defensive position, right? So my portfolio has some growth component and some companies that I think are going to do really well. And on this side, I like having a position where if the market totally tanks or the economy tanks, I think that the business is actually going to do very well. So it's a counter position in my portfolio. It hurts me in good times, in bull markets. Like most of my other stuff has gone up this year, and Flow Traders has gone down. So it is a counterweight to all that stuff, which means that theoretically I should do a bit better in a down market than maybe the general market, assuming other positions hold up sort of as per, like they follow at about the rate of the market. The bottom line for me is that I think these higher interest rates will eventually have a negative impact. Like the thing I really believe is you actually don't fight the Fed. Now that's not a very original idea. That's a saying in the market, but I think that the truth, people say that on the way down when the Fed's cutting rates, but it's actually true on the upside too. Right now, Jay Powell does want an economic contraction, and in his press conference this week, somebody asked him if a soft landing was his base case. He said no, it's definitely not, and which means he's trying. I interpret that as he's trying to crash the thing. He's trying to crash the bus to get rid of inflation, right? He's obsessed with inflation. He does not want to be seen as Arthur Burns from the 1970s, the guy who let inflation get out of control. He wants to be seen as Paul Volcker, the tough guy who broke the back of inflation. So, because that's his legacy, he's going to be remembered. And right now, inflation is the only thing that matters, and it's not in his target range. And he is going to do everything he can, and and if it means crashing the economy, so be it. And actually, that's the plan. That's how you break inflation. You destroy the economy. So I think eventually he will get what he wants, and there will be a problem. And if there is, I believe Flow Traders will do quite well. That said, I did buy a little bit more, maybe not even a little bit. I increased my position by 20% at about 18 euros. So I've done that just last week, I think. And now it's a fairly big chunk of my portfolio. I also have a fair amount of cash now, as I am in defense mode. All right, guys, I think that's it for now, and hope you got something from that. But anyway, Flow Traders, terrible quarter. Honestly, who cares? They're still set up to win when the conditions are right. All right, see you in the next video. Thanks.